Talk about divergences. Holy moly. Check this out. From Sentiment Trader, the NASDAQ Composite, it closed at a 52-week high today. We've all saw it. Something it's done 1,080 times since 1984. But on those days, an average of 50% of the stocks on the NASDAQ advanced on that day. So that means that the stocks that make up the NASDAQ Composite were in the green. They were advancing on days at which it hit all-time highs. Today, however, only 31% of the stocks on the exchange advanced. That's the lowest out of all of 1,080 trading days. It's a new record, baby. Oh yeah. Amazon was among the top performers today, up almost 5%, breaking out of this long-term base. So if you're wondering how did the indices not manage to fall further, well, it's very hard for the broad market indices to fall when you have just a monster stock holding up the market. Now, we also saw some strength in Apple and various other ones, but this was by far the bigger performer, breaking out of this significant horizontal channel. Now, the NASDAQ, as it reached all-time highs, created a little bit of a hanging man candle. You can see here on the new high index how low the reading is comparatively to when we reached previous all-time highs as well. You can see this on the new high lows index. On top of that, even a poor reading, you can see that negative divergence. So times are interesting to say the least. You can see the NIMO, breadth of the market, did have a little bit of a plunge today, quite a big plunge today, but it's not by any means overextended to the downside. Another thing to call out is the VIX. The VIX was actually up today, 9%. We saw that big gap up. We filled the gap above us, but the market, yeah, I mean, we just saw the selling pressure at the beginning, but you can see here, just like the VIX, it shot up and then came right back down in this V shape, and we saw a very similar thing into the indices. If you look at the TNX, this probably helped propel technology stocks further, some of the technology stocks further, I should say. However, there's a little bit of a cause for concern here. The TNX, the 10-year yield, down 4.26%. We closed at 1.37%. Or 13.7. We are below the lower Bollinger Band. The Bollinger Band was getting tightly contracted, so this could be a Bollinger Band squeeze to the downside. But just keep in mind, that's a little bit of an extended of a move, so it's likely to potentially see some sort of consolidation or bounce. I'm not saying that that's what I'm predicting, but that's typically what it means. And if you look at the TLH, the move, we broke through that resistance, right? We said it could be a pretty aggressive move. It is also trading above the upper Bollinger Band too here as well. The last chart I want to show before we get into the show is the S&P 500 over the TLT. There's still a clear divergence taking place here. You can see the SPX is breaking into these all-time highs. It reached an all-time high today. Didn't close at an all-time high, but it did reach there. And then you see the S&P 500 over the TLT ratio, and you can clearly see a divergence building here as well. So if you don't know by now, my name is Michael Silva. This is the Stock Market Brief Show. I do this show typically Monday through Friday. However, I will be adjusting the schedule unless there's a big event that takes place. I'm looking probably to do it Monday, Wednesdays, and then Fridays. But if something happens, I'll do it intraday there on like a Thursday or a Tuesday as well. We use technical analysis, we use intramarket analysis to get a good idea as to where the market goes. Let's just go ahead and hop into the main portion of this show. All right, everybody, welcome back. We're going to start off here with the... Oh, I'm about to sneeze. Nope. Yep. Okay, market dashboard. Here we go. Looking at the indices here. Dow Jones finished down 208 points. That was not quite the lagger among them all. The lagger was the S&P 600 small cap. So the small caps took the biggest hit to the downside, down 1.46%. We're going to be getting into those charts because it does offer up a potential opportunity. I did enter into some small cap. I entered into the IWM, but is a very risky type play, so I didn't put too much money on the line. And if you're part of the Discord group, you got that alert. You saw the trade that I got into. NASDAQ finished at an all-time high again. Nothing can bring it down, apparently. Let's look at the sectors really quick. Real estate leading the way. That does fit the script for seasonality. We have utilities also creeping its little head up here. That does not match this script for seasonality. However, it is something to pay attention to, because if utilities and consumer staples, for example, start outperforming the S&P 500, that tends to be a little bit more defensive of a type of environment. And what is interesting is just looking at the 10-year yield. It's not typically something that you see in a booming economy. That's you don't want to see it fall down like this. That's not something's off right here. And as obviously more money's going into bonds, you have more buyers going into these 10, 20 year. This is the TLH. You can look at the TLT too, but that also signals, okay, it's protecting capital. It's not as risky of an environment. It's more of a risk-off type play. So as the equity markets press higher, you're seeing the bonds move higher. You're seeing these divergences. It's obviously a lot of rotation taking place. Very difficult environment to navigate. So you just need to be very careful. Let's hop into the indices right now. S&P 500. Really all I want to call out here, we have a hanging man type candle. Okay, so that's bearish technically, right? You big move to the upside. I've had people say, well, why is it bearish? Well, I mean, it's just showing you that the bears did show up today. They didn't hold their ground, but they're letting you know that they are there, meaning that there's some supply here. Okay, it is an outside trading candle too as well. It's needs to be confirmed, so it's still technically bullish context at this particular point in time, especially that all the moving averages, the price action is right above it. If you look at the 15-minute time frame, we had the PMO crossover. We talked about that in the Discord group, and you can see here just a boom, boom, V bottom. It came down, tagged the 5-day moving average, found its support right at about 430 on the nose. 430 is a very important level to watch out for. So going into tomorrow, yes, if we start taking out 434 and getting a couple closes above that on the 15-minute time frame, cool, we might see a press higher. Just know that there is some supply out in that zone, so we'll see what takes place. If we start cracking down through 430 and we don't take out 434, that means we're going to be putting in a lower high and a lower low. So it's just something to be mindful of. But as it stands right now, inclining 5-day moving average, price percent oscillator, sorry, PMO, is a bullish crossover. We'll see what happens in the future markets and where we open up tomorrow. The Dow Jones Industrial Average, down 208 points, not even a full percent, still above the 50-day, still above the 200, the 20-day, and the 100 and 200. You can see here there was previous resistance, and guess what? There's more supply that's showing up here. What do you know? If you look at the 15-minute time frame, I actually took a position into the DIA, a very short-term position. We'll see if it goes in my favor. If you're part of that Discord group, I announced it there when I got in. I'm up on the position slightly. I did it right around this bullish crossover here on the PMO. I do want to call out, though, this is a possibility of a bear flag, and if that breaks down, we can obviously head lower. The next area where we would probably go would be right around 340 to 340.50. I probably would be getting stopped out significantly before that point if the market wants to press down. I don't like, risking that big of a move to potentially, I'm not going to get too much into that one. NDX, all-time high, hanging man candle. Okay, very similar type things that we're seeing kind of across the board here. And we're trading right at around the upper range of the Bollinger Band. So just note, upper range of the Bollinger Band, hanging man candle, RSI is pretty dang frothy up here. Yes, it's in bullish context, but also what's the risk to reward right here by going long? It's a time where you want to start really either trimming positions or taking some profits off the table. Holy moly, it's been a monster move. If you look at the 15-minute time frame, just bottom left to top right, 5-day moving average is consistently inclining. We had the price percent, sorry, I keep on saying that, I'll get over it. PMO crossed over, is bullish, and it's above zero, so that's nice. You can see just down, straight up. It's talk about just interesting price action, just down, boop, boop, V recovery. As we've stated in the previous video, all the dips are kind of like GIFs. This one pulled down right at the range that we were talking about yesterday, right next to the 5-day moving average. It got bought right back up, so we'll continue to see how that develops. So we do now have some more support right at around that 355 range, and then also we have that resistance right at around 360. I do think that if we get some sort of a gap up or a strong gap up tomorrow, and the market opens up above these 361s or even higher, that would be obviously clearly a negative divergence here on the RSI, on the 15-minute time frame. Other time frames is too, like the 2 hour. But I think that you would probably see some selling pressure into it, and then you'd want to see what the market does right at around 11 Eastern Standard Time. Sometimes when it gets past the volatile moments, then you can kind of get a clear direction as to where the market wants to head. Here's the IWM. IWM pulled right down into that area of confluence and found support. That we talked about yesterday. The 100-day moving average was in confluence with the lower Bollinger Band and the 50-day moving average. Bam, tagged it and then started pressing up higher. The RSI is below 50. It's still within this sideways chop range. This could be presenting itself actually a pretty darn good opportunity. If we get more of a move to the downside, I'm actually looking to purchase in probably right around that 220 to 222 range, and then be holding probably tight stop losses for the most part. I'm not going to try to tag a bottom, especially if the sell-off continues. Small caps have been getting beaten up. I took a small position, like I've been saying earlier in the show, in the IWM. It's more of what's called a lotto trade, where you just take some very like short time frame options. I'm looking at call options that expire at the end of the week. So if I do get a gap up, I'm probably going to sell into that. This could be potentially also a bear flag. I bought in right around this crossover here on the PMO. I'm looking for right at around 229 as the target. Keep in mind that the 5-day moving average is declining here. So if we get a gap up, it's declining. I'm looking to sell into that versus, buy into that. Until we see some more strength, right? Like yesterday, we were talking about if we get above 229, that's bullish. We didn't get there. If we got above 232, that'd be even more bullish. But guess what? We didn't get there. So the same thing goes here. We need to get back above those key levels, and we're not there yet. Let's look at a couple sectors and industries. Transports. Transports failed to get above that, and guess what? We broke down. We had the bullish crossover there on the PMO, and we started to find its bottom. The 5-day moving average is going sideways, so right now it's just a period of, it's either slowing momentum in the index, where we're going to either resolve once we break down, we'd resolve to the downside, or if we break out, we would resolve to the upside. And as it stands right now, there's no direction. It is just boop, 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 chop. So when there's no direction, we can't really trade in this environment. And you can see here potential for a bear flag as it stands. Then let's look at semiconductors, also possibility for a bear flag. So I'm seeing a lot of bear flags out there, but this could just be because, we saw the strong move to the downside, and then we saw these bounces right back up, and that's all that took place today. So we got to get back above 260, 250. That would be very bullish. We're still below the 5-day moving average. It's starting to flatten out here. We had the crossover here on the PMO, so that's a good sign. But we need to get above 262 to feel a little bit more confident in this specific trade. BKX, this is the banking. We're looking at financials. Also, possibility for another bear flag. This one also is a little scary because we have the 5-day moving average. It is flat to declining here, and the PMO is obviously below zero. We had a bullish crossover. It found its bottom, but it's kind of curling itself over, so we'll see what takes place there tomorrow. Like I said, the 10-year yield, the TNX, let's pull that chart back up. The 10-year yield is getting extended to the downside. All right, so if this bounces, its chances are we can see the banks bounce too as well, because banks typically do well when we see this 10-year yield rise. We've talked about as to why that is. In short, it's banks borrow short-term, i.e. deposits, and they lend out long-term home loans, auto loans, etc. And as you can see here, higher lows are being put in, but it's still below that declining 5-day moving average. So we'll monitor it. I don't see a trade as of this particular point in time. So I'm just, like I said, I'm going to be keeping a close eye on it. Let's look at commodities. Gold had a really nice day today. However, it started to sell off a little bit later. Price percent oscillator looks like it wants to start crossing over. We are moving into that 26-day cycle that we learned about from Tom McClellan. So we'll see here if that is a turning point, perhaps. It has, look at these 26-day here to the downside, 26-day here after consolidation, it moved to the upside. Right here, after bouncing up, it moved to the downside. So there's been pretty significant moves from each of these 26-day periods for the most part. So we'll see here if this is like, if it reaches up here, then we see a move to the downside and the dollar wants to continue pressing higher. But the gold held up quite well, especially in the environment that the dollar right now is actually rising, which is also interesting because we have equities rising too. The indices are rising, we should say, but there's a lot of declining stocks, as we've pointed out. Silver down 1.23%, nothing going on right now at this particular point in time. It looks like it's consolidating sideways. Either it's going to be breaking down, breaking down through 25.5, and then I could see a significant flush here to around 24, or we're going to start getting back above these moving averages and try once again to take out $30. Copper also looked very good on the day, but completely rolled itself over. Price percent oscillator, I'm looking for the bullish crossover, and I'm looking for a breakout above this downward sloping trend line. We're not there yet, so we'll continue to monitor it. And oil hit an all-time high today, or not an all-time high, but a high within the last quite some time, probably what, since 2000, I don't have the chart in front of me, I don't want to butcher it, but it's like 4, 5, 6 years, maybe a little bit more, right at around almost $78 a barrel. So where was the high? Yeah, 76.98, so almost $77 a barrel as a high, and then it came completely tumbling down. So we have an outside trading day. That's a very bearish looking candle, but let's see if we get some continuation more to the downside as the price percent oscillator has been kind of losing steam. Bearish crossover 2 is taking place. Overall context, still bullish, right? Above the 20-day, above the 50-day, above the 100, above the 200. So was this a peak? I don't know. That's way too hard to say. The context is still there. What we would need to see in order for the trend to change is we would need to see a lower high and a lower low. And as it stands right now, we have a high, a higher high, we have a low, we have a higher low. So we'll continue to just watch for what takes place here. And we all saw today, energy stocks got completely clobbered. I got out a couple of my positions for a small gain. Let's look at the dollar, the last chart of the day here. The dollar is still breaking out of this bull flag. It showed some weakness, and then it right again showed some strength. So we finished up very slightly on the day for the dollar. And this inverse correlation, it's just not playing out right now with the S&P 500. When the dollar was breaking down, everything was going up. And then when we saw the dollar kind of move strong to the upside, right over here on this little left shoulder, the S&P 500 moved down, and then we started really breaking out. But the S&P 500, yeah, it fell down slightly. But now we've just been kind of drifting higher, and this is really, in due part to a couple of sectors, communications, and then also technology stocks. So they make up a big weight, and when you have these mega cap tech stocks holding the market and pressing the market higher, it's a good thing to see the indices floating higher, but it's also, you have this stealth bear market taking place behind the curtain. So it's just something that you need to be very mindful of, be very careful about when you are trading in this specific environment, because a lot of complacency is out there, as we stated recently. There's actually a chart, not a chart, it was something that I read, it was a statistic, and it was saying that, like, oh man, I don't want to butcher it, but it was like 50% of all the retail trading accounts between like the last 7 years were opened up, and they're all on Robinhood. So they were all like 50% of retail traders between 5 or 6 years or whatever it was opened up on Robinhood, and that to me is pretty darn crazy. And then it showed even more that over 50% of those accounts check their Robinhood app every single day, up to 8 times per day. So talk about just like a lot of engagement here in the markets, and a lot of speculation currently still in the markets. That's all I got for you guys on today's stock market brief. Be careful out there. Like I stated, I want to restate it. All right, the markets are moving higher. It's being held up by few, as many are falling. Okay, so if you have large positions on, make sure if you're up, you can be taking some profits, and then start looking for opportunities, i.e. potential dips. And these dips have been being bought up. So, until that changes, that's the game plan as of right now. All right, that's all I got for you guys. See you later.